Hey, Job here. On this channel, I invest 100% of my income and live out of my Robinhood brokerage account. I've been doing this since the end of May 2025, and today we'll be going over the week 50 portfolio update since I started doing this strategy. I'm hoping that this strategy will hopefully bring me to an early retirement by 40 years old. It's a very aggressive strategy for sure, but after almost a year of running it next month, it's yielding some very promising results so far. I'll go into all the details, breaking down my big outperformance this week. I nearly 3x the S&P 500's performance with a whopping 6.96% total return gain. I'll go over all my dividends received, portfolio updates, and finance video of the week. All that said, as usual, you'll get radical transparency on this channel. Whether the market is up or down, you'll see all my real numbers, see exactly how much skin I have in the game for any given position. If you appreciate all the transparency, give a like and subscribe. As usual, just a quick disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor and nothing here should be taken as a financial investment or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Make sure you give a read of the full disclaimer here. And if we pop over to the flowchart here, so this is a refresher for anyone that may be new to the channel. This is the flowchart that I use week in, week out. I invest 100% of my income, which is at a minimum 2.25K a week right now with my new job. I invest 10% of that into growth and 90% of that into high yield ETFs. I've stopped using a traditional bank account to live entirely out of my Robinhood brokerage account. I use cheap margin of 4.5% to pay all my bills and bridge the gap between my monthly dividends and monthly bills. The goal is to ideally never sell a share. I want to forever compound both my growth and high yield assets and eventually have my monthly dividends exceed my monthly expenses. And by that point, at a minimum, I'd already be work optional. And ideally, I want to build up my monthly dividends in excess of that. And yeah, and with that said, let's just pop over to Robinhood. So if we check here, I had a nice green day on Friday, ended the week at 218.6K. It was up 3.10% on Friday or 6.5K. And as you can see too, this is my full live portfolio, right? Nothing hidden here. And if we check on the week, was, as I mentioned, was up 6.96% or 14.2K. On the month, yeah, up a massive 40.1K or 22.45%. On the 3 months, I'm up 36.6K or 20.15%. If you check year to date, I'm up 36.7K or 20.22%. So quite a bit. And yeah, you can kind of really see how, I was outperforming a little bit in January and dipped a lot. Went all the way down as much as like minus 15% or 28.6K at the depths of the Iran conflict. And then as there's kind of been hope that maybe the conflict would end, I'm still not buying it, but yeah, we've been enjoying the last few weeks of just constant green. So that's been really helping with the margin on the portfolio as well. You can kind of see how successive green days can really kind of work in your favor too, but also you can kind of see both scenarios, right? How red days can really bring things down as well. I was really underperforming the market during this time, right? But now I'm really outperforming. So then if we go to all, since I transferred to Robinhood in July last year, I'm up 25.12% or 43.9K. So yeah, just a big run up since the hopium of the conflict ending here. Then if we pop over to my investment sheet to kind of really dive into these numbers in depth. So if we pop over here, so you'll see that my gross value right now, if you add up all my assets in the portfolio, that's sitting at 392.1K. So getting very, very close to 400K gross balance, which will be a pretty big milestone. And then probably quickly after that, we'll be able to hit 500K soon, which is crazy to be nearly at 500,000 here. And then with margin used, I'm sitting at 174K, and which gives me a net value of 218.1K. So this was the value at the end of the day there, right? The Robinhood one was a little bit more inflated because of after hours. And with that, both the total return column and the unrealized gain side is starting to be just very green, right? As I've mentioned in previous weeks. So if we go off the total profit, so that's realized gains, dividends received, and all that on margin, I'm actually up 85.7K since I started tracking this in the portfolio, or 39.3% up. If we go on the unrealized side, that includes my realized gains, my unrealized gains, and all that on margin. I'm up 18.9K or 8.7%. So yeah, nicely in the green here. As a nice surprise this week, WiMAX actually pulled out of the red in total return. So I'm obviously very red in the unrealized gain side because of, just NAV erosion and everything with WiMAX and Ulti, given how heavy they are with their distributions, and kind of makes it hard to keep up with the NAV. But given all the income that they're throwing out and the little uptrend we've had in the last few weeks, YMAX has managed to pull out. Alti is kind of on the cusp of kind of getting into the green, which is surprising. So yeah, just cool to see that they are benefiting a little bit from the upswing here and still making all their income, right? But still, as I mentioned, I'm not really contributing to these. And one thing to note too is that once we'll go to Snowball, you'll see that these numbers here in total return are a little bit different, right? And the reason is, for some reason, Snowball is not getting the updated cost basis from Robinhood, which actually factors in the ROC I received last year. But I do that in my sheet. So that's why, like, yeah, if we pop over to Snowball, for example, and then check on Alti and YMAX, so you'll see that these numbers are still in the red here. So that's kind of the difference between factoring the ROC or not. So when you factor in ROC, your cost basis actually lowers, right? So yeah, YMAX and Alti got quite a bit last year. So these got adjusted quite a bit compared to the old cost basis, essentially. But overall, just there's only Alti left in the red in total returns, BTCI, which I'm still investing in and buying the dips, right? But most everything else is in the green. ORR, which I'm still investing in and buying the dips here, but that's kind of slowly climbing out as well. But yeah, just solid overall. Like XPay massively in the green at 30.55%, Chippy quite a bit at 32% or 12.7K. TDAC doing really good as well. And yeah, all the indexes like climbing out, and MLPI just barely in the green here, but still in the green with total returns. So everything's holding up really nicely. If we look at the split between growth and high yield income, on the growth side of things, I'm sitting at 192.8K. That's in the portfolio. So all these tickers, right? And so that's roughly 49%. And then on the high yield income side, I've started eclipsing the growth side of my portfolio since I've been going heavier into it. And that's sitting at 199.2K. So almost about to eclipse 200K on that. Of note, it's almost, it's almost actually in the positive compared to book value here. So I'm very, very positive because of the total return, right? But on the unrealized side, this is actually going to flip to the green soon, which is pretty cool to see. So that's what makes up the full 392.1K in the portfolio here. And if we check in on the margin health, like I know this section is maybe a little bit more boring, but like given that I'm so heavy in margin, I think it's important to track this stuff every week, right? And really monitor where I'm at, right? And yeah, even through like the Iran war downturn, you really saw how like my equity dipped under 50%, and how I managed that even with the layoff, right? So there was a lot of pressure on the portfolio there, but that was still important to kind of really, really take a close look at my margin health every week. So yeah, for the gross portfolio value, margin use, and net portfolio value, we went over these already. But if you take the gross portfolio value, then multiply it by the blended margin maintenance. So all my positions are 25% margin maintenance, which is great. It's just the most efficient I can be with my margin buffer and my equity and my buying power. That gives me a margin maintenance of 98K, right? And if you take that 98K and minus it out to the net portfolio value, that basically gives you a margin buffer of 120K. So getting a healthier and healthier margin buffer here. And the key thing with the margin buffer here is to, you can calculate it two ways, right? So the Robinhood shows the margin buffer on the net portfolio value. So 55%, which, you know, in theory feels like very healthy. But yeah, personally, I don't like kind of going off of this because this makes you feel safer than you are, right? So really what I like doing is taking this margin buffer, because if this margin buffer were to go down from the gross portfolio value, right, this would be the equivalent of a 55% drop. So if you take this 120K and divide it by the gross portfolio value, this margin buffer here on the gross value. So that's 30.62%. So if the gross portfolio value were to fall 30%, that would be the equivalent of a 55% drop on the net portfolio value, right? So it gets a bit complicated, but that's what kind of takes into account the leveragification and the margin amplification. I think that's a key thing people kind of forget sometimes when they kind of just look at this net margin buffer value, because they're like, oh, that's higher than it is. But really, this is all these assets is what's in play in the market, right? So yeah, if that drops 30%, you'll actually be dropping 55% on your net portfolio value. So all very important to keep in mind, and I can't stress that enough, honestly. And I'll probably make a separate video on this, honestly, just so I can kind of keep pointing at this in the future. But yeah, as far as the buying power, if you take your margin total and minus out your margin used, my buying power is sitting at 87.4K, so kind of having that steadily go up. If you take half your buying power, that's your cash available for withdrawal, so 43.7K. So this is like cold hard cash that I could actually withdraw from the portfolio. If I wanted to actually invest it all in the portfolio, I could actually invest this whole 87.4K, and then obviously the cash would drop to zero. But yeah, kind of want to keep this healthy, and I don't want to over leverage too much given that I'm already pretty high in margin use, right? And then my equity is sitting at 55.62%. So this is kind of just climbing along with my contributions and the market being on a big run up last few weeks. And as far as my monthly dividends, I'm estimating roughly $4,842 per month on average. I recently recalculated all my dividends here. So basically what I'm doing is that for the monthlies, I'm basically doing like a trailing 3-month average for them just to kind of get a rough idea. And then for the weeklies, I'm doing a trailing 4-week average to kind of get just a recent performance of it and just to kind of get an idea there. So that's how this is a little bit different than what you might see in Snowball, right? They just take the last payout and project that out. And yeah, I just want to get a little bit more of an average there. And with that monthly dividend, that's basically yielding me 29.16% right now in distribution yield. So that's just on the high yield income assets of the portfolio, right? If we go off the full taxable portfolio, I'm actually sitting at 15.46%. And yeah, the key thing here is that really like I'm paying $648 a month in interest for all that margin I'm carrying, right? The 174K. But what I'm making is 4.8K. So there's like a huge spread there between that. So making a lot of profit on top of the leverage that I'm taking out to run this portfolio, right? So a really positive spread there. So for me, that I think that's a good deal and a great spread. I know that might not be the case for everyone, but that's what I enjoy for this portfolio. And yeah, and then if we pop over to Snowball, we can kind of take a deeper dive here at like the categories, and this is a little bit more broken down. So I kind of break them down into 4 different ones. So I have the 2 high yield ETFs one. So that's where my singles and ultra yielders sit. So anything that's like above 20% or above 30%, right? So this is actually kind of nicely in the green now. So up 10.84% or 11.3K. If we dive in, you can kind of really see that all that is kind of being shouldered by Chippy, has had like a great run up 32.73%. Yeah, both in capital gains and dividends. YMAX and Ulti, like, yeah, still in the red here, but YMAX is actually in the green with the updated cost basis. BTCI slowly climbing out of there, and I'm still investing in this and trying to buy those dips, right? Yeah, you can kind of see that I've been buying in this channel here. So whenever there's that another major uptrend, we'll be able to catch that. On the anchors, these are kind of just climbing steadily up 12.3K or 12.95%. So that's all my index ones and also my energy plays and copper. So yeah, these are all kind of going up nicely and yeah, staying positive both in NAV and in with dividends. So strong total returns all across the board here. The hedges are kind of starting to kind of be firmly in the green here or still in the red, and I'm still buying into the dips, right? Like as I've mentioned, you can kind of see there. So I really bought at the worst time here when I bought in and I sold out of my single stocks. This was the dip from the war in Iran. And then, yeah, I've just kind of, as I've been rebuying growth still, now that I have my new job, trying to buy in the dip there to hopefully catch the next uptrend. And really the goal with OR and CLSC is to basically have a lot less beta and volatility in the portfolio. It's just to kind of help reduce the swings here. Yeah, they compared to the S&P, they're just a lot less volatile and have a lot less beta. So it should be a little bit of a smoother ride when you kind of look at it, right? You're just kind of like a nice uptrend and not as much kind of swings that you normally get. And yeah, and gold as well. This is I do a $200 buy of this every month just to have an uncorrelated asset to the market that I'm building up, right? Of note, I'm thinking that I might switch this later this month. So IAUA been nice. And the reason I picked this over KGLD initially is that I like that there was a 25% gold exposure into this in the spot ETF. And then also that it was a little bit less volatile. But the more I think about it, maybe I should kind of go for KGLD instead. It just has like better performance overall, better yield, 17% over 12. And then just has like better NAV appreciation as well too, factoring out the dividends. But there is a lot more swings, right? So it'll be a little bit more of a bumpy ride, but maybe in the long term, I think that might be a better play. So I'm thinking after I get the next dividend for IUI, I'll probably switch this capital to KGLD. And as far as the growth and dividend growth anchor ETFs, so these are just kind of sitting nicely in the portfolio, very in the green, right? Like double digits across the board. VU's up majorly at 20%, VGT's up at 22%, SPMO 20%, SCHD 30%, QQQM 45%. So this is all doing really well. And yeah, we'll just kind of keep banging away at these as I invest 10% of my paycheck into them. And if we pop over to the growth side of things and check out how we're looking, so we see here that like, yeah, I beat out the S&P 500 by 4.54% or 9.4K. Yeah, kind of started the week off the same and then kind of really, really popped off here. And if we compare it into the raw numbers here, so you can kind of see that I was up 6.99% or 14.2K, and the S&P in the same time was up 2.34% or 4.7K. So the margin amplification really working in my favor here and working nicely. And also one thing that's nice in this snowball thing too is that you can kind of check your different categories too. So like if I check my different categories, say my growth anchors, kind of see how they still outperform too, right? You kind of see and isolated to that. You can kind of see how my hedges did this week. Big outperformance there, probably from CLSC, right? And then you can even check like the high yield anchors, how they did. So just about, just slightly underperformed the S&P here, even with total returns, right? And then how did the ultra yielders did? The ultra yielders did quite a bit good today. So this week. And I think a lot of this is on Chippy's back, right? So yeah, I like that you can kind of filter it based on your categories, but for now we'll just look at the full thing together. And if we look at the heat map, actually, yeah, and let's just check year to date too, and just check across so you can kind of really see how stuff has progressed, like how it's underperforming and then have had this big run up, right? Yeah, on the month, on the 3 months, on the 6 months. So finally in the green there, and year to date. So yeah, just firmly beating it, which is nice. If we pop back to the heat map here, so yeah, my favorite chart here that I always love going over now, and I honestly love having this in the thumbnail too, to just kind of like really show the progress from week to week. You can kind of just see at a glance in the thumbnail. So this week you can really see that like SEHD had a little bit of a downtrend with like on the strength of all the tech stuff going up. The struggled at minus 0.75%. MLPI still struggling with like the price of oil going down. So that was down 3.3%. And that's why I bought some more this week and buying that dip, right? But everything else was like really in the green. Chippy very in the green this week, up 8.2%. XPay here actually beat out VU, which is cool to see. PMO getting some good momentum here and beating out even VU. Yeah, CLSC and OR holding up nicely as far as the long shorts and kind of doing their thing here. Yeah, QQQ, TDAC actually kind of got a good chunk of capturing that performance, which is cool. QQQI a lot less. So yeah, week to week, it's been interesting to see that like, yeah, overall, it seems like consistently I've been seeing TDAC captures a lot better of the performance of QQQ versus QQQI. So that's been interesting to see that 0DT has been working really nicely. And then if we check on VU, same story there. T-SPY held up a little bit better, but closer to SPY-I here. IUI up. Like copper was up a lot this week, 7.7%. Yeah, YMAX outperformed VU quite a bit. Alti actually just matched the S&P. So yeah, just very cool to see how things have been going, right? And if we check year to date, you can kind of really see, yeah, most everything in the green, ORR still in the red, and that's why I'm still buying. BTCI still a bit in the red, minus 4.9%, and that's why I'm still buying as well. Just trying to buy those dips, right? MLPI is slightly less in the green compared to everything else, and that's why I'm still buying. So yeah, I love using the heat map, honestly, to kind of give an idea of what to buy week in, week out, right? So that'll change every week based on what's low that week or what's low on the year, on the month. So yeah, just love using this as a little tool to really help guide my investing, to find those good dips. If we pop over to the dividend calendar and kind of see what we made this week. So a bit of a slower week. We got our monthly dividend from T-SPY, got $73 at 13.85% from Tap Alpha. Got our Chippy dividend at $388 and at 41%, $207 from Ulti at 64%, and $128 from YMAX at 49%. So yeah, just a little over $800 this week. And it looks like we're trending towards getting 4.7K this month, which is nice. And yeah, you can kind of see what I was talking about here about the monthly being different compared to my sheet, right? So yeah, Snowball tends to either underestimate or overestimate because they just take the last payouts and project out. So right now they're saying 5.1K, but I think on average it's probably closer to the 4.8K I was mentioning. So yeah, we'll see how we do in the rest of the month. And generally, like any buys that I make, I try to make it on stuff that hasn't paid out yet, so that like I help kind of push up those payments for later in the month. So for example, like now that we've passed T-SPY, I might not favor buying that now, right? I might just buy that like earlier in the month or at the end of the month if we're coming on the week for it. So just a little thing to keep in mind there. As far as the dividends, if we dive in, we can kind of really see, yeah, the usual suspects there. Ulti, that's kind of its yield and its NAV has eroded. So yeah, I'm getting a 64% dividend yield every week, but like the yield on cost for all the capital I have invested into it is closer to 41%, which is still good. Or YMAX, 49% this week, but the yield on cost for all the capital I have in it is more like 32%. So still great and still high, all things considered. Chippy just doing crazy and yield on cost actually going higher with its outperformance. BTC getting a 25% yield every month, but that's closer to like 19% given the capital I have in it. And then for the rest, then you can kind of really see here again, right? Like XPay, TDAC, KCOP, MLPI, TSPY, QQQI, IAUI, SPY-I. You can kind of really see why I'm focusing on this year, because really they're solid, right? They barely have their yield eroding. They barely have their NAV eroding. It's actually appreciating. So these make for solid anchors and yeah, just kind of keep a solid yield there. But I am still glad that I have some of these higher flyers here too, right? This really helps bolster the income in the portfolio. And when I had my layoff, I was really thankful I had these, right? To really have that 4.67K a month that I had at the time. If I just had these, I'd be in like the 1,000, 2,000 maybe, right? So yeah, these make a good chunk of the dividends, but now I'm building these out a lot more. And yeah, as these erode a little bit, I'm being cognizant of that, right? And you can kind of see the dividends received in the last 12 months, and we're just year over year kind of seeing how my dividends are beating out last year. I think for May, in May I think we'll be good to beat it. I think for June as well. I think for these later months, this will be harder to beat year over year, but we'll see. And yeah, and that's the full performance of the portfolio there. As far as updates related to the portfolio, yeah, one thing that I was doing this week, so you might have gotten a heads up of this if you're on the Discord, so definitely check it out. But I am doing a test this month of reinvesting all my weekly dividends. So that's for Chippy, YMAX, and Alti. So anytime I receive that every week, I'll be reinvesting that into the portfolio into safer yielding stocks. So kind of like redirecting the money there. I'm not letting that deposit to cash or margin. Just want to run this little experiment in May and just kind of see how the numbers move. I've kind of been running projections on it and all that, but like I just want to see it in practice in the end. Kind of decided that this week. So you can kind of see here, for example, with this week's Chippy, YMAX, and Alti dividend, I put that into buy. And then earlier in the week, when I decided this, I took last week's dividend for Chippy, Alti, and YMAX and put that into TSPY ahead of its payout this week. So yeah, it'll be nice. I think that'll be a nice little boost to the portfolio. And yeah, just trying to test something to like see what I can do to kind of help boost the income. Because yeah, as I showed in the projection last month, things are kind of lagging behind a little bit. And I kind of want to reach the net salary replacement a lot quicker than it's currently going, even though I'm already going pretty quick. But yeah, I just honestly have those layoffs on my mind, right? And just want to safeguard against them as best as I can. And if we pop over to here, to my portfolio, there was one thing that I was having a lot of random shower thoughts. I don't know if anyone else does their best thinking about their portfolio in the shower sometimes, because that's when I'm like listening to videos or just thinking about stuff as I'm listening to videos as I shower. And yeah, so I'm just going to rattle off a bunch of sometimes crazy random portfolio shower thoughts. Feel free to chime in the comments on what you think. So I have 3 that I was thinking about this week. So I was like, what if I sold all my growth stocks and split them between, so like basically all these, right? And then split them between TSPY and TDAC equally, so 50-50 each, for roughly a 15% yield, right? So TSPY does roughly 14% and TDAC does roughly 17%. So that would average about a 15% yield. That would actually boost my monthly income by 2.4K. So like if you do the math, right? So if we take the 192,873 times 0.15, that gives 28.9K a year. Divide that by 12. That's 2.4K a year that I would add to my income here. So if I add that to the 4842.63, I'd be at 7.2K a month in monthly dividends. So getting pretty close to my full salary replaced, right? Or my net salary at least. So yeah, obviously that would be a big boost to that. And then I was thinking that maybe I could even then rebuild growth through instead, like right now the weekly dividends are being used to reinvest into the safer yielders, right? But maybe I just use the weekly dividends at that point and just start rebuilding growth, and then maybe just kind of continue that cycle every few months or whatnot, right? Oh yeah, random thought there. Or alternatively, what if I sold all my growth, so all these guys, just the growth ETFs, do the same as I was talking about with TSPY TDAC, split that. But then maybe for CLSC and ORR, given that these are kind of like hedges, right? Potentially maybe I invest that into SPY-H, QQQH from Neos. Those are kind of like their hedged S&P and QQQ positions. So yeah, just kind of helps protect against the downsides a bit more and smooths out the ride a bit, but a little bit of a smaller yield, right? A 6 and 8% yield or something like that. So yeah, another random thought there. And another thing I was thinking about, so given that I have actually, I guess I can't see my gains and losses on the desktop, which is not great. But I have like a 21K loss this year so far, right? From all the rebalancing I did earlier in the year when I sold out of all my positions that had leverage or higher margin maintenance than 25%, like after the layoff, because I want to reduce volatility in the portfolio. And yeah, so that's 21K of losses. And I was thinking, so right now there's quite a bit of gains in the growth side of things, like 34.9K of gains. So I was thinking, what if I had sold from these growth positions, right? Basically just to realize the gains and actually just buy back into the same ones. And this wouldn't be a wash sale because wash sales are only for losses, but it would basically just reset my unrealized gains here and basically take profits and basically wipe out any of the losses that I have. Yeah, just come tax time. But yeah, also potentially I could just use that as carryover losses for future years as I've done and offset any future gains of any other sales. So I don't know, random thought I had this week. Let me know what you think of this segment. I thought it was kind of a fun thing to maybe do, but yeah, just random thoughts. Not necessarily going to act on some of these, but maybe one thing that I do want to do though, since I was thinking about like eventually potentially selling all my growth and just going fully into income, it would be good to maybe add a tab here of kind of showing that hypothetical, right? So like if I sold all my growth, like what would my monthly dividends look like? Like maybe once I reach that point where it just shows that I'm actually going to actually replace my net salary, maybe I pull the trigger on that eventually, right? So I maybe might put the two scenarios there. So for the full growth into T-SPY TDAC or that split that I was talking about between these and the hedges. So we'll see. I might actually add that. You might notice that in the next portfolio update video. That could be an interesting one to just have and keep track of, just in case as a hypothetical. Yeah, that's portfolio thoughts for this week. Let me know what you think in the comments of all those random ideas. As far as the finance video of the week, I wanted to go over another one from Brent, Investing on the Go. So he's a good friend of the channel and one who's very active and a super useful member in our Discord community. Like he's always posting in general, posting like great things about the market and analysis. So he does some really good technical analysis on stuff, which is cool to see. And yeah, he reached a good milestone this week for his channel. He got monetized again. He used to be monetized and he lost it, so because he took a pause, but he got it again. But definitely a channel worth checking out. I love, honestly, how in-depth he gets with his spending and his budgeting in particular. And what's great with him is that he's actually retired, right? And he's actually retired and living off his portfolio and high yield income. He got laid off a year ago, and instead of just kind of looking for another job, he actually just made the jump and actually just retired. So he had enough between his portfolio and also the real estate stuff, cash flow he has. So yeah, really no theory here. He's actually living it all in practice, which is great to see. And one thing that's worth mentioning too, one thing I do in the Discord is that, so we have quite a bit of YouTubers in the Discord, which I love, and they share their videos in the channel and stuff like that, and that's totally fine. I'm very open to that. Very open to people learning from tons of different ways of living out of your brokerage, whether it's growth, high yield income, or whatnot. But anytime there's a new YouTuber that joins the channel, there are these private channels that I add. So I have a YouTuber one. So there's like all these guys that are on here, and it's great. And that's where Brent actually announced that he got monetized again. And yeah, just a great little way to kind of build community amongst us finance YouTubers and share our wins, shares tips and tricks that we're learning, any scares or whatnot. So yeah, great little way I found to kind of just foster some nicer community with the YouTubers on the channel here. So yeah, very supportive of other channels and other people posting their stuff here. Like, so that's something I really took a lot of inspiration from Huge, actually, on his channel. Yeah, how he carries his Discord. So shout out to his Discord too. Definitely check it out. Yeah, he was always good about letting people post their videos in the channel there. So love how open he is there, and took a lot of big inspiration there. So, and with that said, if you want to support the channel, best way to do that is check out the description below for any video. You'll find my Snowball portfolio that I was talking about, right? All the same numbers here. My free portfolio spreadsheet as well, the same one that you can use for your own needs. The free Discord, as I mentioned, my Blossom social profile. And there's also the Patreon and YouTube membership if you want to support that way. And then on Patreon, there's also just the free portion of just watching all the videos, the backlog there. That's completely free, like on YouTube. So yeah, if you appreciate all this transparency, please give a like and subscribe. Hit the bell notification if you want to be notified about future videos. And I'll catch you in the next one. Peace.